Coming up next, we have Steve Hoffman, Strategic Alliance Manager, Avalara. Since joining Avalara in 2017, Steve helps partners, business owners, and finance professionals maintain compliance and leverage best practices across the industry. Ladies and gentlemen, please help me welcome Steve Hoffman.
So thank you guys all for hanging around a little bit today to talk about tax. I know it's a very exciting topic, especially for the end of the day, but we're not far away from cocktails, so hopefully that'll make this a little more palatable for everyone. My name is Steve Hoffman. I'm with Avalara. Avalara is a sales tax software for those of you. Oh, thank you. Just the green button. For those of you who are not aware who we are, we've been in business for well over 10 years, and we work with all kinds of ERPs and e-commerce companies to make sure that, in our case, e-commerce merchants have the ability to collect and remit sales tax appropriately and on time. It's not the most exciting topic in the world, and in business, taxes don't really do much for you besides if you pay them on time and you pay the right amount, you don't get in trouble. It's a non-revenue driving activity, so there's not a lot of excitement to it. Over the course of the past year and a half, a lot more excitement has been happening around taxes. So that's what I'm here to kind of talk about today, is just kind of where we are in the state of sales tax and remote selling a year after a very important ruling in the industry happened. For those of you who did not hear last year about the South Dakota versus Wayfair ruling, basically in the past, everybody knew that companies had to collect sales tax, or companies could collect sales tax based on location, either the location of their offices, their company, where their buyers were, where their products were. So it's all based on a locality or a geography nexus. June 21st, 2018, Supreme Court said that, you know what, states can now go after any sort of sales tax they want to, and they can do it based on nexuses that weren't just specifically around locality. They could do it based on what they call economic nexus. And once this happened, the entire world of e-commerce changed, and the entire world of tax changed. Let me see what we got here. Okay, so an economic nexus is basically where, again, you as a merchant or a seller, you don't have to collect sales tax from your buyer based on a locality, but you can do it based on an economic threshold that you reach as a state. Now, this got to be, and it continues to be, very confusing for sellers, merchants, buyers, for everybody, because it's a target that just continues to move all the time. So let's imagine that you are a state back a year ago, now, or looking to do something in the future, and you have an ability to just go collect money from people that the Supreme Court said you could go collect. Of course, you're going to go do that, right? So what has happened over the course of the past year is just about every state has passed laws that is surrounding this economic nexus because they see that there's money to be made. Not only do they see there's money to be made, but they're hiring people to go ahead and find money. So think if you are a state and you want to go find money, how are you going to do it? Well, you're going to hire some people, some really smart people out of college. These really smart people out of college are going to have accounting degrees. They're also going to have the ability to use computers, and they're going to have the ability to find data that people in the past just couldn't find, right? So states are hiring very smart people, have staffs of people that are going after money. And imagine, again, you're just out of college with your accounting degree and you want to make a good impression on your bosses. You're going to go try to find as much money for the state as you possibly can. So as a seller of products, you're up against that bureaucracy who wants to collect money and now has the legal right to go after that money. And you have aggressive people, smart people that are going to be on the trail of those people that are not in compliance as far as collecting. So I say that to completely scare you, and at the same time let you know that there's other ways to manage this to make sure, again, that you're in compliance in this non-revenue driving activity. So unlike physical presence, this economic nexus is based entirely on revenue, transaction volume, or both. It's different for every state, and it's changing all the time. We actually have a blog at Avalara where you can go and see the differences that happen all the time. So right now, I know that the blog that was posted 2 days ago is if you're selling Christmas candy in Minnesota, how is that going to affect your taxes? And this information, while interesting, not really, is something that in the past you might not need to know, but now you might need to know it because you want to make sure you stay in compliance and you don't have these people coming after you for money. Here's some just examples for everyone so you can all see kind of what a couple different states are doing. So Colorado, effective date June 1st, 2019. It's only triggered by sales, and you have to have a transaction threshold of sales of $100,000 or more online. Hawaii, effective date was a year ago before that, and it was based on sales or transaction volume, so either the amount of the purchases or the number of purchases, and $100,000 or 200 transactions. So 2 different states, could be the same exact products, different amount that's going to be collected. Here's California's right here, and started on April 1st, 2019. And this is retail sales. It's California, obviously, so we have all kinds of different things that they like to throw in, or we like to throw in. It's sales only, threshold's $500,000. They're going after bigger companies. Sales in the preceding or current calendar year, so they are going retroactive. Again, 3 different states, 3 totally different rules and thresholds that are going to have to be met. So as a merchant, you have decisions to make. How am I going to figure out this information? How am I going to gather this information? Do I want to hire somebody to do that? Do I want to take some of my staff that I currently have and hope that we can train them or hope that they know what they're doing? Or do I want to outsource that to an organization that can help you out? So there are plenty of organizations in the tax world that do sales tax software, Avalara certainly being one of them. And so it's important to make sure that you don't get scared and don't let it slow you down as a business, but at the same time, you got to recognize that this is out there. So states with economic nexus laws as of November 4th, so last week. There's only 1, 2, 3, 4, 5, plus Puerto Rico, 6 states that don't have economic nexus laws right now. So when this law was first enacted by the Supreme Court, 2018, it was kind of predicted that this might take a long time. Now, Avalara at the time was very open and told everybody, no, this is going to go much faster than you think because states are going to want to collect this money, and turns out to be correct. So we're a year later, a little over a year later, and just about every state now has economic nexus laws. So just some tips for businesses, and I do want to say this. So this presentation, I've given this presentation plenty of times. My colleague Matt, who's here, has also given it plenty of times. This can go up to like 3 hours long, so we're really condensing it. We're certainly here to answer any questions as well. But ultimately, you want to consult your sales and tax legal team or advisor that you use because they're going to be your first point of contact regarding that. If you don't have one, we can certainly help to recommend some people that we work with in your area or your vertical space. Second thing you need to do is figure out where you have nexus. And again, that can be a complex and convoluted practice in and of itself. And then figure out how to register for those states. And again, we do have sales tax advisory services, which can assist with that if need be. Marketplaces, obviously, with the Amazons of the world, marketplaces are a big deal. What does that mean for remote sellers? These laws began to appear in 2017. The states realized that Amazon wasn't charging sales tax to third-party marketplace sales. So again, knowing that the dollar was an important thing for them, states don't want to miss out on this revenue, so they're now going after this money as well. Marketplace facilitator laws, what are they? Basically what they said, each marketplace is unique, and they recommend that sellers work with your marketplace facilitators, your Amazons, your eBays, to determine the best practice for managing it. Just obviously keep in mind that Amazon, eBay are not going to be paying those, so it's going to be on, they're going to collect from the buyer, and then the seller is going to be have to figure out how they're going to work that relationship with the buyer and the seller. So they're going to be facilitators, but they're certainly not going to be the one responsible and or paying for it. Here's just a couple of different examples. California and New York. You can see these are brand new. California is brand new. And I'll just read the California one. A marketplace facilitator that sells or facilitates sales of tangible personal property must collect and remit sales tax and use tax through every purchase in California. New York, and there's $500,000, which is the same as their economic nexus for non-marketplace. In New York, a marketplace provider that made or facilitated more than $500,000 in gross sales and or 100 and over 100 transactions. So again, two different states, two different laws, very confusing, very convoluted. These are the states with marketplace facilitator laws as of November 1st, 2019. Not quite the adoption yet, but you know it's coming. Again, it's just revenue there for the states. So, as I mentioned before, you have a couple of choices. You can hire somebody to do it, a person to do it, a tax advisor. You can have a tax team. You can train somebody in your team to do it, or you can outsource it to a third party that can help you kind of navigate these waters. It's not easy. There are over 13,000 tax jurisdictions in the United States alone. And the rules change all the time, and as of the last year, they're changing every single day. So why do companies outsource that to third-party vendors? So an auditor is not likely to find mistakes. 25% of the people do it for that reason, but an auditor is less likely to find mistakes. So there's always the fear that the auditor is going to knock on your door. You're not going to have the information handy. You're not going to have the information at all. You're going to have the wrong information. The yearly employee cost of compliance, we have here between $67,000 and $400,000. It's a pretty big variance based on the type of company. Bottom line is that's money. Again, you're not getting revenue to cover that, but you want to make sure that, that you don't have to eat that money either. So when it comes to tax compliance, your rates and what the tax rules are just your 8.25% or whatever the state tax is just the tip of the iceberg. So those are the regular tax calculations. So if you have an e-commerce platform, that's what your ship can run into, but that you can see. But there's a lot of other things that go into that, especially now with the economic nexus. So let me go through this real quick. These are all addressed. This will be a little salesy here, but these can all be addressed with the Avalara Sales Tax Suite online. Excuse me. One is Nexus. So you can add jurisdictions with just one click. So as you realize your company is growing or you're selling to more areas, you can add different states, different companies. We can remit those taxes for you, and you can just do it with one click, as opposed to having to go through all the paperwork that you'd have to do with each individual state. This is very important as you look to grow your business. Again, this is not about having fear, but having a solution so that you can grow comfortably and not worry about having the growth in your organization. Product taxability. Built-in rules, ongoing updates. Again, there's 13,000 different tax jurisdictions in the United States over that. And these tax jurisdictions go from sorry, I'm got ahead of myself. That's gonna be the next one. Let me go back to product taxability. So product taxability is talking about just every single product that you sell is going to have a different tax code associated with it. But the problem is, excuse me, if you go to like New York, if you have a bagel in New York and it's sliced in half, it's one tax rate. If it's not sliced, it's a different tax rate because it's a different kind of food. If you go to, there's some states that have it where if you have a candy bar that has milk chocolate in it, it's considered a food. Where it's not milk chocolate or it's white chocolate or whatever, it's considered a snack. Again, different tax calculation. There's all these random rules that are out there, and it's really tough for you to keep track of it. People outsource this task because organizations like Avalara have an entire army of people who their whole job is to follow what each state is doing to make sure that in the tax, what you send out to your customer as a tax is the correct tax, and you don't have to go back and collect more money from your buyer. More importantly, you have the right amount that you're remitting to this state. Okay, so jurisdiction assignment talks to the areas. So in different areas, there's going to be different taxes. So a couple ways this works is you have a municipality that's wants to fund a new Little League. Okay, so they might charge a tax, so like a 0.5% tax or whatever on goods. That's going to go through this Little League. So who keeps track of that? Who adds that? Who knows what exact zip codes are going to be incorporated in that? It's add that onto your regular sales tax and any other jurisdictions that are going to happen there. Again, a lot of work. In addition to that, there are a lot of places around this country where you have your 13,000 tax jurisdictions where you have buildings that are so big, you might have a mall, and there are places like this where on one side of the mall it's one tax rate, on the other side of the mall it's another tax rate, just because the mall is so big and you have different tax rates based on their geography alone. Again, I'm just trying to show you the complexity here. It's not easy. Exemption certificates, where if a company is exempt from taxes, how do you keep track of that? It's very important to have those up to date, have those updated every single year, because again, this now is being a revenue-driven activity for the states. You just want to make sure that you're compliant and have the ability to not only keep your exemption certificates up to date, but you have the ability to have those handy so that if you do get audited, you can just tell the auditor, like, here's my exemption certificates, or send them online to find them. But you want to make this as an easy process as possible. So if you do get audited, you can simply say, hey, here you go, move them along, and they're probably not going to audit you again in the near future because they know you're doing the right things. State and local tax filing. So after you do your taxes, after you charge your buyer for your taxes, somebody has to remit that and send that to the state. So people outsource that because they don't want to do that. And so this is something that an outsourced company like Avalara can certainly do for you. And audit readiness. Again, if you are going to get an audit to help you prepare and not prepare, but have the information handy so that you can show the auditor that you're doing the right thing. Now, you see a lot of things, right? You have your above the water, you have your regular tax rates, and then you have all these other complex and moving things below it. But at the same time, what might be more important is, as an e-commerce company, you have your customers and you want to make sure you give your customers a great customer service experience, right? So your customers don't care about all this stuff, right? They're like, whatever, I want to purchase something and I know there's a tax on it, I'll pay the tax. So you can't have the system set up where your tax engine is just going to be spinning while they're in the checkout, right? This has to be done automatically, accurately, and in a way that's not going to upset your customers and hurt your customer service, more importantly, your sales, right? So Avalara does all of this within a tenth of a second, they get it back, right? They don't even know that it went through this entire tax engine. So it's important to make sure you understand that not only does it have to be accurate, not only does it have to be fast, not only does it have to be easy to use for you, but it's got to make sure that your customers don't notice it, they have a great experience, and that they're just dealing with you as a company, not you as a company that's collecting tax. And this is just showing the Avalara end-to-end sales tax automation suite, where again, we work with you to, as a merchant, to create what your tax engine should look like. Your customer goes in, gets the information back, they pay the tax, you have the information handy, nobody gets audited, hopefully, and if they do, you got the information handy. And all of these economic nexuses, local jurisdiction nexuses, locality nexuses, they don't matter. It's just something that is the cost of doing business, and you can handle it very easily, very efficiently, without having to worry about slowing down your business, without worrying about not being able to expand. And yeah, it's a great way to use outsource in the correct manner. And let's see here. And that goes all the way from certificate capture, that goes to the exemption certificates we talked about earlier, to make sure if you're tax exempt, your customers can use that. We run the engine through your e-commerce platform. It's tied to the e-commerce platform, and then it gets remitted to the government. Come on. We have over 25,000 customers using Avalara right now. Accurate, efficient, and integrated. I'm going to move this along really fast because we're just about out of time. There is something called, a lot of people don't know, it's called SST. It's free sales tax services for qualifying businesses. There's up to 24 states you may qualify for free registrations, tax calculations, returns, audit assistance, and it's something you can reach out to Avalara, and we can certainly let you know if you're eligible and how it works. And this is just the blurb on that. So free sales tax automation is brilliant. So that's the SST. And I'm down to 12 seconds. I know tax questions can be a little bit difficult. So do we do Q&A or do we just move on from here, time-wise? Okay. As long as you got easy questions, then go ahead and ask them. Go ahead.
You guys also manage Nexus by affiliates? Like
Yep.
programs that...
Yep. Absolutely. Affiliates. That was Matt, right? Yep. Anybody else? Oh, sorry.
Those sales that you mentioned, are they business sales or just online sales?
Online sales.
Online sales only?
Yep. Yeah, so, but we do, just so you know, we do more than just e-commerce platforms. So ERP platforms, things like that, where the business information is coming from. And a lot of times, most of our companies that we work with will use like an ERP tied into the e-commerce platform and things like that. So we have connectors to all of those, which run the sales tax engine.
So you do delivery as well?
Yep, exactly. Exactly.
So, kind of piggybacking on the gentleman's question, so you said outside sales teams sales will not qualify into whatever threshold is for paying that tax, so like $500,000 or whatever?
No, this is just based on your online, so it's a tangible good.
Yeah, so if we have a direct sales team that's also selling within those states, do those sales also qualify for that threshold?
Y-
Yes, I mean, so it depends on,
Yep.
sorry. It depends state by state. Some state regulations are, they'll call them retail sales, which are usually considered taxable. So if If what you're selling is not taxable or you're selling to resellers in that situation, those wouldn't be included in that state. Other states say total revenue. So it doesn't matter how you sell. It doesn't matter if it's eBay, Amazon, anything. You count all of it to see where the threshold is. But every state's guidelines are a little different. We've got some assistants online that can show you what that is, or we can talk to you about that.
Ladies and gentlemen, Steve Hoffman, thank you so much.
There you go.